Welcome to the Company Value Investor. In today's video, we are going to analyze the Cheesecake Factory. So let's find it under the program. Here we go, Cheesecake Factory. Okay, the ticker symbol is CAKE. The current price for the Cheesecake Factory is $43 per share. The rate needed is 20%. The amount expected, -46. The company's real earnings, 60. And the amount needed, -780. So for the average investor, think of the current price as the FICO score. Think of the interest rate as the credit card interest that you pay. Think of the amount expected as the amount you need to make in order for you to make all your payments. The amount made, the real earnings, think of them as the amount that you actually made either at the end of the month or at the end of the year. And number 4, the amount needed, think of it as the amount that you need in order to maintain your lifestyle. So in essence, we are comparing you, the individual, to a company. And if everything turns out good, then it's worth considering investing in this company. Now, the first thing I see is that all the items to the right are green. That tells me that this is a good company. The fact that it is a strong stock, the stock is undervalued, and it's a profitable company, all those 3 different items, when you add them together, provides me with a good company. How do I know it's a strong stock? Well, the price to book ratio is 3.2 and the retained earnings is almost 70%, which is good. How do I know it's undervalued stock? Well, currently it's $43, but this stock should be higher than $43 based on the fact that they've been profitable and they've had positive cash inflows. Again, it is profitable. How do I know it's profitable? Well, if you look at the retained earnings, the real earnings, and the amount that it should be making, that right there tells me that it's a profitable company. So they're able to meet the obligations or their payments to their owners and all the other obligations that they need to make. Now, this is 2016. Let's do an analysis for the last few years. 2015, the company had a strong stock. It was undervalued. It was profitable, even though they had more of a amount expected, more outflows, not outflows, but they had more of the amount expected than the real earnings. They still had very good earnings. What you're looking for is a small difference, not a large difference. If this was -56 and this was 1 or 0 or negative, then it wouldn't be a profitable company. Okay, so 2015 is good. 2016, again, strong company. The same thing again. -55. However, they had pretty good earnings of 40. The stock was undervalued, and by undervalued I mean we're going off the current price. Even though we're analyzing 2014, we're using the current price, and the company again was profitable. 2013. In all 4 years, the company showed that it's a strong stock. The stock is undervalued and it's profitable, very profitable. So let's take it one step further. Okay, let's analyze the cash flows. For the last 2016, they have positive cash flows. 2015, 14, and 13, they had negative cash flows, and the reason being was because in 2015, 2014, and 2013, they spent a lot of money, almost half of all the money that they made investing. In 2016, they invest the same amount as the prior years, except the only difference is 2016 was a very profitable year because they made a lot of money by their operations. Whatever they do, they were doing it good. Now, let's look at it a different way. So today, 10/17/2017, if I was to invest, let's say $10,000 on the Cheesecake Factory, costing me $43 a share, that would give me 232 shares. And at the end of 1 year, if everything keeps going the way it's going, I should have a very good profit. A profit of about $7,000. So if I invest $10,000 today, by the same time around next year, I should be getting back about 17,000. That's a major interest increase. Now let's take it a step further. Let's just say we want to invest $1,000. Well, if I invest $1,000 today, I get 23 shares. At the end of the 1 year, exactly 1 year, I will be making about $77 on my $1,000 investment. That'll put me at about a little over 7% interest that I earn. That's a $77 profit. The reason why 10,000 would give me such a greater amount was because it is a greater amount. So in essence, I'm taking a bigger risk, but the reward is also bigger. Remember, investing is, no matter how good the company is still a risk. So the only real issue that I see or that I have with the Cheesecake Factory is that the cash flows were negative the last 3 years, not counting 2016. Maybe 2016 was a very good year, but based on their prior performance, they've had negative cash flows, not by a lot. In 2015, they had negative 14, and I'm talking about millions of dollars. So the fact that they've had negative cash flows the last 3 years prior to 2016 kind of puts a little dent in my analysis. But the fact that if I invest $1,000 today, a year from now, I'm going to make $77 on the same investment. If I invest, let's say, $5,000, that'll leave me with $6,922 if everything goes the way it's been going. It all depends on how the price of the company, or the shares of the company, it depends on a lot of different factors, but based on the fact that it's a strong company, the stock is undervalued, and it's a profitable company, the question is, would I invest in the Cheesecake Factory? Yes, at this point I would invest, but one of my criteria is I always invest the amount that's going to give me more than what I pay for my credit card. So my expectation is I have to make at least 20% interest on whatever I invest. So would I invest $1,000 in the Cheesecake Factory? No, because $1,000 would only give me a 7%, 7.6%. But $5,000 would give me a 38% increase, meaning that I would profit about almost $2,000. So again, would I invest in this company? Yes, I would. At this point in time, I would invest. I will conduct the analysis again in 6 more months because the price might change. But as of now, I would invest approximately $4,000, at least $4,000, to attain a high interest of 30% on my investment. If I invest $1,000, and you can invest any amount that you feel comfortable with, just know that the less you invest, the less you tend to make. So for me, it would be at least $3,500 to $4,000 in order for me to get the at least 25% interest on my investment. that is it. As always, keep investing.